Okay, welcome to phase 3 of the course. Okay, at this point, we've already done the introduction. We know that we have to find a directional bias for the day. Are we looking for buys or sells? We've learned to draw our supply and demand zones from, legs that break structure, impulsive legs to the downside or the upside. And then we've learned to refine them on the 15-minute time frame, right? So that, you could really even just trade off of that, but I have certain criteria that needs to be met before I will enter a trade. A lot of times I'll have to miss a trade just because it does not meet this. So please grab your notebook and pen and write this down, because this is very fundamental to this strategy. Okay, this has to be followed. This is really the key, the key to entering trades. Okay, this is the only way that you should be entering it, and this is the only way you should be entering a trade, really. After you've gotten the direction, you've gotten the bias of what you want to do, and you have your zone that you feel you're very comfortable, that you've drawn it correctly, you've refined it correctly, and you're aware of any other zones that may be to the left-hand side. Once this is done and you're ready to take the trade, okay, we're going to want a couple of things to happen before we take this trade, okay? We're going to want to wait for price to get into our zone, push right into our zone. That's perfect. We love it. We're waiting for that. We want to wait for a 15-minute candle to print, okay? Sometimes it will enter the zone and leave very quickly, but typically it will give you at least one 15-minute candle. Okay, I do just that. That's good enough for me because I'm very comfortable in the zones that I draw. So as long as you have drawn the correct refined zone, double check it. As long as that's done correctly, this shouldn't be a problem, okay? Sometimes if the 15-minute candle isn't bearish the way you want it to be in a bearish scenario, or bullish as you want it to be in a bullish scenario, let the next 15-minute candle print, okay? Or wait for or you can do this with a 30-minute as well if you want to have extra confirmation. And in a scenario, what we're looking at today, like Euro AUD for the bearish scenario, and then we're going to go look at NAS for the bullish scenario. For the bearish scenario, let's say, we're going to wait for price to come into our zone. We're going to wait for it to print a 15-minute candle or 2 or 3. Perhaps we'll see. We'll look at some examples. And then we're going to want price to the next candle that is currently running to break the low of the previous candles. One candle, maybe 2 candles. Every scenario we'll look at. I sometimes enter trades where I let one 15-minute candle print in my zone. And if the next candle breaks the low of that candle, I'm in. And that's when you typically get the best risk to reward trades, okay? That's when you're very certain about the zones that you've drawn. So today, again, let's take a look at Euro AUD, which, was trending very nicely. And let's just look at some of the zones that I've drawn out. Now, some of these zones I've drawn, majority, you want to first look at the 1 hour time frame, okay? Like this was a leg that broke this previous structure, and we kind of have a feel that we're coming down now. Okay, we're coming down now. And then some of these other zones were refined from the 15-minute because I told you guys even one candle between the push, one bullish candle in a bearish push can be refined as a zone, okay? It can be refined as a zone. So these zones have already been drawn out. We've already been through the zones part, so we're not really going to get too much into that. We're going to get more into how do I actually enter these trades, right? What are the candlestick entries that I need to be able to enter these trades? So we're going to go to the 15-minute, and we're just going to go find it. Okay. And we're going to take a look at each one of these examples. I think this was the first one. Okay. So in this scenario, okay, of course I would have drawn this zone here. I would have drawn this out. But if price fails to reach that zone and is moving away very quickly, you can remove that zone and just basically get rid of it, okay? Price here created structure, okay? It made a high. It created structure, and I'll put a little area for the structure. Sorry, give me 1 minute here. Price created structure right here. Okay, this could have been a high. And then, this leg here, this supply area, boom, right here broke this structure. Look, we broke it. Okay, we broke it. So all we're waiting for to do is we're going to draw this zone. We're going to consider this zone still in mind, but we're going to draw this zone. Wait for price to just come back here. Very simple. Price comes back into our zone that we've drawn. We see one 15-minute candle been printed. Okay. And it's good to see a candle like this, a pin. This is what I call a pin bar. And the 3-pin formation, which will be shared in the patterns video in the extra confluences phase 4. With a candlestick like this coming into my zone in a potentially strong downtrend, I would enter right away. And I would enter when I see this pin bar candle printed. And this candle, I'm going to wait for this candle to break the low of the wick of this candle. So we're going to wait for a 15-minute candle to print. And then we're going to wait for the next 15-minute candle to break the low of that candle. And as soon as it does that, we are in. We're in. That's it. And for this one, I would have probably put my stop loss above that previous wick there. Okay. Coming down all the way, potentially you could have came down all the way to this move that shot up, right? And we have a good, easy 1-to-3, 1-to-4 risk to reward ratio. Okay. That's done. The next thing, again, you know, this like this push, yes, this is now a new zone for us because this was the major push, right? This was the major push. And I'm sure we probably came back to it at some point. Okay, maybe, yeah, kind of. Okay, but in between the push, this is where we got the big impulse candle, right here. So this kind of really broke structure. So I would draw both zones and wait to see like what happens in this area. Okay. In this situation here, you know, potentially some people would have gotten stopped out. Maybe I would have gotten stopped out. I don't know, because as soon as I would have seen this candle and I would have seen this candle break the low of this candle, I would have entered right here. I don't know. I probably would have put it above this last wick. So I probably would not have actually gotten stopped out. Coming back just down to this area here, because this is where the impulse push to the upside happened. Great 1-to-4 risk to reward. Boom, done. Okay. So this area has already been smashed. Now we did that again here. Could you have taken this trade and gotten now break even? 100%. Okay. Could you have taken this trade here and again gotten like a 1 to 2.5? 100%. Okay. From this area, again, we kind of tapped into this and this little zone here. But because it was such a strong push to the upside, I probably wouldn't have taken this trade. But if you see, you know, price pushing back down below the zone, and then kind of creating this situation where we're not breaking, after this push down, we should have just moved up. Okay, we should have just moved up. Okay. Again, in this area, if you see, you know, we're closing back into the zone, you know, and we see this break of structure here on the 15-minute. Right here, we see this break of structure. This is an indication that price wants to move down, okay? Price wants to move down. You could have taken this trade in two ways. Number one, you know, when price broke the low of this candle, you could have taken it right here. Your stops would have been really big here, unfortunately. But again, you know, you can still target all the way down here. So you would have still gone 1 to 3. Okay. The more ideal way of entering would have been let price push back up a little bit. Okay. Maybe print a 15-minute candle like this one here, a bearish candle. We know, you know, it's trying to push up, but it can't. And enter on the break of this candle. So something like this. Okay. And then the 1 to 3 is a little bit easier to hold than having to wait for it to completely melt. And I mean, look, like if you hold some of these trades, it can get real crazy. Okay, like this is how you pass challenges. You got to leave some runners running, 0.5%, whatever. Let some stuff run. Personal accounts, you know, 163 pips, like that's a lot of money. That's a lot of money. So, okay, coming back down. So, you know, in this area, I know I'm going to get the question, okay, why did you draw this zone and not this zone and not this zone? Okay, I'll tell you exactly why. Because this is the area where we got a little bit of bullish action. And then this is the area that, this area didn't really break any structure. There's the structure right here. This push is the push that broke this structure and the structure to the past. So this is where I'm drawing from. Okay, and when I see price come in and throw a candle like this, a doji, that's beautiful, beautiful. Okay, I can enter right on the break of this doji. Or if you want to be a little bit more safer, you know, you're not sure about the zone, I don't know, wait for another 15-minute candle to print. Let that print. Once that prints and the bottom breaks, you're in. Stops above here. Okay, there you go. There's your 1 to 3, you know. Probably could have gotten something bigger, but just examples. There's so many examples to show. I don't even know what to do here. You know, again, this is the impulsive leg that broke all of the structure to the left-hand side. This is all structure right here. This is all structure being broken by this leg. Push back in. We kind of, depending on how we drew the zone, we kind of wicked a little bit up, right? The way I would have taken this trade is I would have seen this 15-minute candle. I would have been like, okay, let's wait for the next candle to break the low of it. The next candle did not. Okay, that's fine. I'm going to wait for the third candle, this one, to break the low of this candle. And I see all these pins on the top. So as soon as that happened, I would have been in right there. Stops would have been above these pins right there. And, you know, like this could have been an insane risk to reward trade. Okay, and you can look to the left to see where to take profit. Huge. Okay, and we're gonna get into a little bit of where to take profits later. I think that's the only example I have moving forward with this chart. Maybe we'll have one more. Let's see, or is this a current live running trade? Sometimes you're gonna get scenarios like this. Okay, so here we have, the reason I've drawn this was from the hourly, but really this should have been drawn from the leg that broke structure, which is this one. Okay, so that's why it's really important to cast the right zone. Sometimes I even make mistakes. That's why writing this down is key. Okay, take the leg that breaks structure. This is the leg that broke structure. This is the last bullish candle that was there. How can we refine and draw that? You know, because we want our zone to at least be a little something size. Boom, right there. Okay, one candle, second candle, we broke. We're going to be taking the trade short roughly here. Stops above there. Go for your 1 to 3. You know, if you're doing a challenge, hold longer. But this is where we started to push to the upside. I would only hold till roughly here. Boom. 90 pips on a personal account. It's a lot of money. Okay. We have another one. The only structure really left on this side here is not much. So this would be the only structure to look at. This is the leg that broke that structure, right? We let it come back. This has probably happened sometime during London session, so I wouldn't really be up for it. But you could have taken this trade easily. You could have taken this trade, wow, what the hell? You could have taken this trade on the break of this candle. Stops above here. Okay, probably would have targeted down here, but you would have still gotten your 1 to 3. Done with it. Came back into your zone. You can see it stalling. You know, you could have taken this trade really any break of any of these 15-minute candles. Let's just put a average. Stops above that area, targeting maybe back to here, back to this impulse push up, 1 to 3, 1 to 4. You could have held all the way down here for 1 to 5, 1 to 6. So just look how crazy that is. Once you find the right direction, okay, you find the right area, it's just, it's crazy the amount of trades that you can take, right? Now we can kind of see this chart. You could have even gotten one entry here, maybe 1 to 2 both of these times. Now we're kind of seeing this thing kind of reverse on us. So in a scenario like this, when you see something like this happen, you've already tapped the zone a bunch of times. You know, we broke structure broke the leg. You're obviously gonna have trades when the chart is starting to reverse, potentially like here. When that's happening, you get stopped out of your first trade, just let it be. Like, I'm not taking any trades here. I'm just gonna let it be. I wanna see what happens, okay? Two scenarios are gonna happen here. Either we're gonna push up and I'm gonna have this zone drawn out because this zone broke structure. So moving forward, I'm gonna draw this out and I will take the trade on it if it happens. Or I'm gonna see if this, you know, potentially breaks a little bit this structure here. If this does, then I'll draw this zone out and wait for price to come back. So we'll see what happens there. Okay. We're gonna quickly just go into the bullish scenario of entering. Candlestick entries on a bullish scenario. Please pause the video here and go practice in TradingView. Take a break for the rest of the day. If you've been at the course for the full day, take a break here, cut it off, and come back tomorrow, because it's better to absorb that information that you've gotten, and come back, okay? Because it's a lot of information to go refine your zones, write down the candlestick entry criteria, like, you know, thinking about it in your head what the bearish scenario looks like, and then come back tomorrow for the bullish scenario. And then we're going to go into NAS 100 and look at the bullish scenario of things. And then to end this phase 3 of the entry criteria, we're going to have 2 more videos. We're going to have where to take profit, okay, where to take profit, and something I call the money candle. It's a crazy concept, but it can make you a lot of money. So if you've been going at it for the full day, I would suggest take a break here and come back to this the next video. But yeah, we're going to end this here. This was entry criteria, okay?